Hello, everybody. It's Dylan Milks here for Monday, January the 2nd, 2012. And Happy New Year to everybody. And hope you guys had a good New Year's Eve and had a good 2011. And, I'm excited about 2012. I think that 2012 is going to be a real monumental year. I think that some of the issues that the world is facing economically, politically, and even in terms of militarily, I think are very fascinating, and I think are certainly going to be um, very interesting to follow. And of course, all those things, especially the political and the military issues, have a major impact on the economy and on the economic side. And just to kind of summarize, 2011 when it comes to gold and silver. Um, of course, we saw, gold started the year of 2011 off at about $1,350 an ounce, and it ended the year at about $1,550 an ounce, around that range. Now, gold basically experienced pretty much about a 10% gain, while silver experienced about a 10% loss for the year. Silver started the year at about $30.50 and finished the year somewhere in the range of just over $27 an ounce. So really the interesting thing with what happened in 2011 is, of course, we saw gold hit $1,900 an ounce, or around $1,900 an ounce twice. Once in, I believe it was April, and another time back in September. So, and then of course from September on, towards the end of the year, we saw the decline of both gold and silver, to where they ended off in the year. So where do I see gold and silver in 2012? Well, I really think that for the first, I would say, 4 to 6 months of 2012, I think we're going to see the status quo. What I mean by that is we're going to see a continued decline in gold and silver, more so silver than gold, but both of them, for the first 4 to 6 months, I believe, of 2012. Now, why I say this is simple. It's because of the European debt crisis. And if you look at what's happened in the last 4 months of 2011, we saw, so much uncertainty, so much panic and uncertainty with the European debt crisis, that people began to move into what they perceive to be the safe haven asset of the world, which is U.S. debt, meaning U.S. Treasury notes, U.S. dollars, U.S. bonds, this and that. Any kind of paper asset denominated in U.S. dollars. And the key word in all this is perceived safety. Perceived safety. I do believe that in the short term, this is going to continue, and I believe this will continue because I don't think that the European debt crisis will not be solved tomorrow or this week. And I think that even in terms of getting some clarity in terms of where it's headed, I think we're still too early to say exactly, what direction it's going to go. You know, I think it's totally possible that in 2012 we will see a one or even more nations leave the euro currency. Of course, Greece would be the first, you would think, but there are other nations that are not too far behind Greece in terms of their problems. Italy is still facing um, bond auctions that are around the 7% range, which is horrendous. Um, and if that continues for any length of time, even in the next month or two, I think they will soon be asking the European Union, or the European Central Bank, pardon me, and even the IMF for bailouts. Now, Italy is the third largest economy in Europe. Now, if the third largest economy in Europe needs to be asking the European central banks and the IMF for bailouts, you know that there's some serious problems there. And historically speaking, this 7% um, interest rate seems to be the tipping point for disaster or for problems. That was the point for Greece. That was the point for Ireland. And with Italy having been at that point, hovering around the 7% mark for the last couple months, like I said, it's they very well could be next. And if that happens, well, good luck, good luck, Europe. I mean, you're pretty much going down the drain, I think, with if that happens, because really, when your third largest economy starts asking for a bailout or requiring a bailout just to make its principal and interest payments on its debt, there's problems there. So definitely, so that's really my view in terms of gold and silver for the first part of the year, and why. Because as Europe continues to be uncertain, people are going to continue to go to U.S. dollar. The U.S. dollar will continue to gain strength. And again, just to make sure that everybody is understand this clearly, that gold and the U.S. dollar are almost always exact opposites of each other. So when the U.S. dollar gains strength, gold falls in value, and when the U.S. dollar loses value, gold rises. Now, almost always, this is historically, this has been the case. So, and now, if you look at, again, if you take a step back, you look at the big picture here. What do I think of gold and silver still, despite the fact that we're going to have, as I'm predicting here, the first 4 to 6 months decline in gold and silver? Well, again, I like to look at things at the 50,000 foot level. And if you do that, you're going to see that the future of gold and silver are still very, very strong, very good. And again, it all comes down to the U.S. dollar and the fact that earlier in 2011 we had that conference, the Bretton Woods 2 conference, where we had the financial leaders of a lot of the major countries in the world all discussing about the world's next financial system, where we can get off the standard of using the U.S. dollar and move to either a more a basket approach of currencies. And of course, all of this is because so many countries in the world, they want to get rid of the U.S. dollar. And of course, as that happens, and as we start approaching that day when the U.S. dollar is becoming weaker and weaker, that is going to be the lead-up moment to having a situation where we flip the switch and we go to a new system. So certainly, I think that the future of the U.S. dollar is not good. And of course, short term it is good short term, because as Europe still struggles to work out its debt problems and to start finding some band-aid solutions for it, the U.S. dollar will still continue to gain strength, and thus causing gold and silver to fall. So that's just a few things to keep your eye out for in 2012. And I do think also on the war front, definitely keep your eye out on the Iran situation. And the thing that I really stand out to me about Iran is the fact that if you compare the language of the U.S. government and the media to that back in 2002, 2003, leading up to the war with Iraq, a lot of the information, a lot of the facts are really similar. In fact, it's quite shockingly similar. If you remember with Iraq, we had the fact that the international body, the IAEA, went into Iraq, did inspections, said that yes, they were in violation of all these international laws, and that they lied about this and that, and that they were developing these weapons and all this and that. And then of course the Bush administration used that as a pretext for war. And of course they go in there, and what do they find? Of course, nothing, right? And again, this seems to be the same path we're heading down with Iran, because we have the IAEA releases the information that they're developing nuclear weapons, and of course now the war rhetoric is ratcheted up. So to me this seems very similar to the situation with Iraq, and I would not be surprised at all if there's the conflict with Iran takes a serious escalation point sometime in 2012. So thanks everybody for watching, and I hope you have all a great and happy and prosperous 2012. And I'm looking forward to seeing what happens in 2012. And take care, and we'll talk to you again soon. Good night for now.